The Asian markets, there's not much coming through because most of them are shut.
Hot and heavy action continues in mid caps and small caps.
This is a $100 million plus revenue kind of opportunity for me.
The Nifty itself is down about 20 points. So we're starting with a negative bias.
The beginning of a bull market, you will see a lot of these liquidity-driven movements in the market.
Very meaningful addition to our overall portfolio in America. And for sure, we think it will certainly move the needle.
From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch.
I think where the question lies is what is going to happen in terms of the pace of rate cuts.
This year, we will probably just, have some revenue. Just notch up some sales.
35-point kind of slip from the highs for the Nifty. There you have it. So we've moved back into the red as well.
So CLSA has downgraded the stock, that is IDFC First Bank, to underperform from, a buy that they had earlier.
Prime Minister Modi will receive a ceremonial welcome at the White House South Lawns. This will have all elements of a state visit.
For the markets, 30 points lower on the Nifty. We did see a sharper fall from the highs and we have recovered a lot from those levels as well.
Well, that was the day so far. You're with us here on another new edition of Closing Bell, last hour of trade coming up this Thursday. And it's looking a little skittish out there. I'm Prashant. With me, my colleague Nigel, and our colleague Surabhi will join in just a bit. Nigel, hi.
Well, hi, Prashant. A little bit of a skittish day, yes. Not yet at all-time highs. I think we should stop talking about it, right? Because every time we go within kissing distance, we're seeing a bit of a downtake. But it's going to be an interesting final 60 minutes.
Yeah.
Thursday, final hour of trade, the expiry plays out, so let's see how it goes.
I mean, I was joking with somebody, the number of adjectives, flirting, kissing, what are the others? Nearby, close by, almost there. I think, you'll know when it happens because we'll make some noise when it finally happens. But today seems a little unlikely. Of course, things could change. Just a quick thing, right? I mean, and by the way, just look at the last hour and a half or so of the market. It's completely changed. The Nifty was recovering nicely, starting about, I think, 1 o'clock. Basically, the low was 1 o'clock. And that recovery, that bounce that you see, looked like we were, coming up to nice levels. We were in the green. And starting 150, there is this new sell-off which has started, and we're down back down about 0.25% or so. So that's what you have. It's very clear on the graph there. So post sell-off, new sell-off post 150. Again, it's not very large, but we are basically back down to the day's low, which is down about 74 points or so. So there is selling which is starting to emerge at high levels, which is which one is not used to usually. And I think that would still be true that the market is refusing to stay lower for more than a few hours. But I mean, you need to pay attention if at the margin the texture is starting to change a little bit. We've seen that for the last couple of days. Now, HDFC Bank and ICICI Bank, they were, and maybe they've also changed a little bit, but they were up about 1%, 0.5% on your screen. And with that, they are the biggest contributors to what the Bank Nifty is doing. Nifty Bank was doing a little better as compared to the Nifty itself. And small caps and mid caps, I think today is the first day after many, many sessions where you've got even a 1% fall. The mid cap index is down 1% and the small cap index is down about 0.75% or so. Surabhi is joining in. She's running down.
Popped up between the two gentlemen, suddenly miraculously appeared over here. Now, we were having a very good conversation with Karan Taurani on Z, not just Z, the media landscape, ad trends and all of that. So, just quickly running from one studio to the other. But look at the screen, guys. And Prashant, this is what we were discussing, right? What the Fed chair said was not new, but that reiteration coming in and the Swiss central bank also coming in and raising rates. I guess somewhere the bulls have realized that this is not going to be a free, easy lunch, an easy ride to the end of the year. Central banks aren't quite done yet. And maybe some of that reality is getting priced in. But this is quite a steep fall that's coming through. So, Nigel, we thought you'd come back and, we hit it with a bang. I think we'll have to wait a little longer.
Par for the course, the kind of pullback that you're seeing. I have to say that after the kind of run that we have seen, par for the course, the US markets on a 3-session losing streak. Well, we are consolidating, so we'll wait by, let them stabilize, and then we'll hit it out of the park. I think that's the word that's coming in. And I think a couple of days of underperformance in the mid-cap and the small-cap indices actually is good.
Yeah.
Because everything was flying, and stories, when those stories keep getting narrated, then I get a little bit more, skeptical about the market. So it's okay. But in terms of the crucial level that you're looking at today, this morning as well, we put out the level. It is 18,775. That's the crucial level. The day's low as well is very, very close to that mark. And the 18,800 put, the premium's around 23 rupees. So those that are writing this particular strike, they're pocketing the 23-25 rupees odd, and they're hoping that the 18,775 odd level does hold out. For the time being, we have held out that level. So that's the positioning, particularly for the last 60 minutes or so. And we're talking about block trades, large trades taking place. In the last 5 minutes or so, I've seen 5 crore shares taking changing hands on a smaller counter. That's HCC. Just pull up the intraday chart out there. 5 to 7 minutes ago, there were 4.5 to 5 crore shares of HCC that changed hands. And that stock is suddenly did see a bit of an uptick. So big change of hands is what we have seen. But how do you position yourself in the final hour of trade? And it's going to be quite a tricky one, I think. Mitesh Thakkar joins us to tell us exactly that. Mitesh, 75 points lower on the Nifty, you still want to avoid it? Or do you think at some point of time you look to get in?
So, Nigel, my belief is that I think, the market, despite making a fresh high, I think lacked the momentum to see any kind of continuation. The first hour we made a fresh high about 10,082 and made a 5-point higher high, and we have tapered off again. I think this is a market which is very clearly sluggish. The indicator position isn't very healthy, and I think we could now head towards the lower end of the range, which is around 18,650. So broadly, I think, if you've been deploying range bound strategies, if you're shorted at higher levels, maybe around 18,700 and then 18,650 is where you would want to take some profits. Only if you break 18,650, we'll look at a trend reversal. So I think it's still a market which is contracting and consolidating. And on the stock side, I think, with this fact that the breadth is doing well, but the large caps are correcting, I think some shorting positions have been added, and that's what I recommend right now. TVS Motor is looking like a sell. Keep the stop at about levels of 1341 here. Look for targets of 1290 on the downside. And Biocon is a sell as well. Here I would recommend selling with a stop just above levels of 244 and a target of around 226 on the downside.
Okay, got that. Thanks very much, Mitesh, for the calls. We'll come back to you in another couple of minutes to get some more ideas in. But speaking of ideas, the one that the market has been fixated with is life insurance. These stocks have been flying around like there's no tomorrow. The pullback from the February lows has been nothing short of dramatic. And many of them, actually HDFC Life, that's been the torchbearer, so to speak, making fresh 52-week highs almost on a daily basis. Yash is here with some perspective on this. Yash, you of course spoke to the HDFC Life management just last week. Tell us what's changed, this complete reversal in market sentiment towards life insurers.
Well, Surabhi, before I tell you what's changed, there's an interesting fact. On June 28th is when we celebrate the Global Insurance Awareness Day. And looks like these life insurance companies are already celebrating that with the kind of moves that they've seen. Just look at some of these moves. In the last 1 week itself, something like an HDFC Life is up 15%, ICICI Prudential Life is up 12%, Max Financial was a late mover, started moving in the last couple of days. That is now up 18%. SBI Life 5%. Also, LIC, which has been an underperformer so far, is up 8% in the last 7 days itself. Now, this particular move which we've seen in the last 1 week, that has brought these stocks very close to their 52-week high levels. In fact, HDFC Life has been making a new 52-week high since the last 3 days. SBI Life is just about 2.5% away. ICICI Prudential Life about 5% away. Max Financial is still about 10% away from its 52-week high levels. LIC, again, 13% away. Now, coming back to your question in terms of what has changed. FY24 as a year was expected to be a weak year for life insurance companies simply because of two reasons. Because of the taxation change which happened in the budget, a lot of advanced buying of long-term savings policies happened in the month of March itself. That was one reason that gave a strong base to grow on. The second reason was incrementally it would also affect fresh buying of these long-term savings policies in FY24. But the interview that we had with HDFC Life, that came as a very refreshing change to that entire setup. They gave a very strong commentary. VNB growth for FY24 expected to be in mid-teens. APE growth again mid-teens. Margins expected to be in 28 to 30% bracket for HDFC Life. That strong commentary from HDFC Life sort of gave encouragement to the entire sector, since, of course, the whole business won't go to one company, other companies will also grow. Maybe not as much as HDFC Life, but there will be good growth, and that gives hopes on FY24 being a strong year. Of course, there are different triggers for different companies. ICICI Prudential Life has a new MD and CEO in place. Max Financial, there's been a lot of catch-up trade which play out. LIC, there are roadshows which are happening in Hong Kong and UK. So all these companies, different triggers. Of course, one common trigger of a strong FY24 is what has led to this rally in the stocks.
Okay, got that. Thanks for the refresher there, Yash. It's been quite phenomenal, really. By the way, look at that chart. I mean, fall from the highs of over 100 points. This slide is only increasing. I mean, we're talking about a 73-point drop from the top. Of course, we've lost 80,800 in the bargain. And there's weakness all around, whether it's technology, whether it's Reliance, or whether it's the banks for that matter.
Surabhi, just one more point. 18,770, that's the low of the day. Numerous times we have gone to that vicinity of around 18,770, 18,780, and we have bounced off that. So that's clearly the level that the bulls are trying to defend. If we break that 18,770 odd mark today, we'll see a sharper slide. So yes, we're down 70 points odd, but we can easily fall more than 50 points if we break 18,770 odd, given that it's an expiry-related phenomena that could play out as well.
Oh, absolutely. We'll keep that marker in mind.
Yes.
Let's see. Still got plenty of time, before today's session closes out. Let's bring in Deven Choksi into the conversation. Deven, we'll talk about the overall market fall today in just a bit, but since Yash brought up the insurers, I want to get your sense. There's a lot of enthusiasm that's now built back into stock prices, maybe because of the kind of strong commentary that we got from HDFC Life. But would you give it more on the upside? I mean, how do you find valuations for some of these large private insurers?
Yeah, very good afternoon. If you look at, I think, the monthly collection figures of all insurance companies, life insurance companies, that is where probably I think you get more conviction. In fact, I think for last few months, I think we have been suggesting that new business premium and the value of new business in life insurance companies case, I think is recording a growth of 20%. It is sustaining at that growth level on a year-on-year basis. Should this particular trend continue, which in all likely it is likely to be continued, I'll narrate, I think, some of the points, I think, on which it is believed that it will continue. If this growth in the new business premium continues, then in such situation, we are expected to see new money getting into some of the insurance company stocks. Also, on the backdrop of last few years, wherein I think these companies haven't performed on the stock market, they have actually remained sideways or underperformed. I think now the fresh money is entering into it because the valuation on time basis have got corrected, if not on price basis completely. So I think with the growth, these valuations are now getting more reasonable than what they were before in last 2 years. As far as I think the new prospects are concerned in the business, IRDA has actually allowed the life insurance companies to pack the health insurance along with. At the same time, I think the newer insurance product like group insurance products where they do not require the IRDA's permission, I think they are also allowed to be introduced, I think, by the insurance companies. So given the strength that some of these companies are having currently in product launches, I think this augurs well. At the same time, the balanced portfolio between the single premium and I think the par and non-par policies, that is where I believe that I think likes of HDFC probably scores over many of others. So I guess I think that's where the rally is continuing, or maybe I think new money is getting into this stocks.
Okay, well, then, stay with us. Lupin is the stock that we've been kind of getting to you from the morning. They've got that approval to sell the drug Spiriva generic in the US. They'll start selling it from the second quarter of this financial year. What's the impact going to be? Because this is a big one for them. My colleague Ekta caught up with Nilesh Gupta, managing director of the company. Listen in to some of that commentary.
This is, I think it's a great deal for us. I think it's a great moment for India as well. This is the first DPI for Spiriva. It's the first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal. From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch with these complex generics. So we hope to launch in the upcoming quarter. And obviously, we're the only generic at this point of time. So it's going to be a nice opportunity.
Any foreseeable competition that you see probably in the next 2 to 3 years? Any filers that you might have heard of?
So no filers as of now, as we're told. There likely will be an authorized generic at some point of time, but other than that, we don't see competition at this point of time.
The average assumption is that the price erosion would be around 35 to 40% and market share of around 35 to 40% for Lupin eventually. Is that a fair assumption that we are working with? How aggressive do you think Boehringer Ingelheim will be?
Yeah, you're starting to triangulate your numbers. No, from our perspective, I think we have to see. This is a unique kind of product, right? I think it's a very complex product. There's a lot of regulations that we had to go through and the like, and I think all of that should get reflected, one, in the pricing that we're able to command, but I think also in the market share that we eventually get as well. So I think people will obviously appreciate the fact that there's a true generic, but the offtake will be slower, as we saw in albuterol as well. And then obviously the pricing, we'll see how the dynamics work out.
$140 million is the peak estimate in terms of sales, probably by FY25 odd. Is that a fair assumption?
I heard that number. I don't think that number is unfathomable. We have had generic products even bigger than that, so let's see where that goes.
What does this do to the US sales? Because at one point in time, you did hit $200 million in terms of quarterly sales. Then you came down to around 175 odd. What is the average run rate that we can now expect because of Spiriva generic?
Yeah. So we're at around 180 odd million at this point of time, right? And we'll launch in the next quarter. I think obviously it gets back to north of that 200 million. I think at peak we were over 1.1 billion in the US. So there's a lot of room for us to crawl back before we start growing from the highest level that we achieved. But I think products like this, and I think this gives a lot of confidence for future products, right? So if we can do a DPI, now there's any other DPI that we can do as well. There's a pipeline of over 30 inhalation products in our portfolio itself. So I think there is a lot of room to grow out of this one. Thankfully we've toughed out. We've been saying that, okay, this is the bottom, this is the bottom, this is the bottom, and the bottom kept going lower and lower. I think we saw that in Q4. We're seeing that in Q1 as well. We're back to that 170, $180 million kind of number. And that number is a solid foundation to build on with products like this.
Okay, Lupin is also turned around. By the way, the high today was 868. It's now at about 849 or so. So come off with the rest of the market. Devin, any thoughts on this one, Lupin? By the way, we had asked the Lupin, we had the Lupin CFO with us as well, and we asked him about overall industry, the pharma industry, and he did say that, pricing pressure in the US still exists. He said high single digits to early double digits is the kind of pricing pressure, but it is steadying there. Any thoughts?
Yeah, Prashant, I think in general, the companies with the specialty generics or complex generics, as that you want to call it as, I guess I think they are relatively better off as far as their US portfolios are concerned. Probably Sun and the Ciplas have already moved into this particular space earlier, and they have seen themselves succeeding in the US market with some of the specialty products. I think Lupin is making the entry out there, and probably I think this should be going well for them. But I heard the management carefully, and I think they are right. Probably I think one cannot be expecting an immediate response to this particular products, and probably I think resulting into a higher amount of sales. It might be a slightly gradual process as I see it. Since we don't have the full coverage, I would refrain from putting across any projection numbers. But I believe that at least this is making a little better case for Lupin than what it was up till now, as far as I think this product launch is concerned.
Okay, all right. Deven, request you to please stay with us. But before we do that, the markets, we went to around 18,770 odd. We have bounced closer around 40 points from there. So that's clearly the line in the sand just for today, for the final 60 minutes or so on the downside. You're keeping an eye on that. What's helping the find back? I think L&T and Bharti Airtel. Pull up the intraday chart of both those two. I think that's trying to fight back a little bit. They are heavier weights on the index. That's why I'm just pointing that out. Yes, L&T is helping. Bharti Airtel as well should come up for you on the screen. So we're up 45 points from the day's low. Can we sustain this up move is important because we've been seeing at high levels there is some selling that comes in. Time to slip into a short break. When you come back, our alpha manager of the day, Ajay Vora of Nuvama Asset Management, will be joining in.
Welcome back. Well, a couple of the exchange stocks have had a pretty interesting session today. There is a SEBI circular that has come out, and it talks about standardizing the format of trading preferences by clients. As usual, fairly technical. Let's ask Vivek what this means, because BSE has been climbing higher. It surged 5% today, whereas MCX has been under a bit of pressure. Vivek, what's going on?
Well, that's right. So a couple of days back, the SEBI circular has come out. It's titled Trading Preferences by Clients. And, this particular circular will come into effect from August 1st, 2023. And, from 1st November, it will actually be implemented. So there is a 3-month window or a 3-month implementation time. What it basically means is that existing customers will be able to trade in all segments on all exchanges from 1st November 2023. To simplify it further, what it basically means, and especially in the context of MCX, what we understood from analysts is that this particular move increases the competitive risk for MCX, given the fact that in the commodity segment, where MCX is actually majority, which has the majority market share, and most of the commodity trading is done on the MCX platform. Now you will be able to do it both on NSE as well as BSE, given the fact that most of the brokers earlier, who had exclusive ties with MCX, will now be able to do it both on BSE as well as NSE. So the same clients can now trade on NSE as well as BSE's commodity platforms. And this actually, according to analysts, has been one of the key challenges faced by both NSE as well as BSE to go ahead and ramp up their volumes. Also, what we understand is that the company has already reached out to SEBI and they're looking out for more clarity. We'll wait and watch out for this one. But at this point of time, mild negative for MCX, given the fact that there could be some loss of market share to both BSE as well as NSE.
Okay, all right, Vivek. Thanks very much for that. We'll keep that in mind. By the way, this is pretty historic. I mean, what you're seeing on the screen, the stock is not reacting. It's been reacting to this for many, many months now. But the deal has been announced. If you go by Bloomberg reports, GE Aerospace signs the accord with Hindustan Aeronautics. So that this big mega engine deal where the manufacturing is going to take place jointly here in India. This was the expectation in Prime Minister Modi's visit. And it's finally been done. I guess, not so much from a stock price perspective today, Prashant, but more from a sentiment perspective. It's a big milestone, right? We've been talking about the indigenization story, technology transfer. This is a big one for the sector.
I mean, if this is actually, and by the way, this is our colleague Parikshit who had first reported this about 2 weeks ago, that this is going to happen. Now it has happened, as he told us. But absolutely, I mean, even with things like phones, right? The big criticism is that we are not developing technologies. It's all assembly.
It's contract manufacturing
of
some sorts.
Right?
Yeah, assembly.
So, and that's the lowest value part of it's the last 2% of the entire value of the product. But if this is, of course, I mean, a technology transfer, as Parikshit told us, this clause in this MOU gives for that, and progressively more technology transfer over the years.
Up to 80%, I remember Parikshit saying, in the latter part of the deal.
And aircraft, I mean, there's a holy grail, right?
Yeah.
I mean, in terms of patents and technology, etc.
Engineering, marvel, absolutely. Okay, I think we still have Deven with us. Deven, not sure, I mean, this is a bit out of syllabus, but in case you have a view either on HAL or if you want to make a quick comment on defense as a whole, because these stocks have run up tremendously. HAL is up 100%. Some of the others like Masgao Dock up 400%. So what's the advice to investors? Still buy or wait for a cool down? How do you approach this defense space?
Well, I think on one side, the opportunity basket is opening up. Clarity is more emerging as far as I think the order book position is concerned for companies like HAL or for that matter, BEL, even in other cases also, I think some other engineering companies, they have relatively more amount of visibility as far as their order book is concerned. But few things have to be kept in mind. These orders are going to get executed over a period of time. So it's not going to happen that overnight some extraordinary amount of execution will happen. No, that cannot happen. Probably I think it will be on a staggered basis. It will happen over 3 to 5 years time for sure. So better visibility, of course. But at the same time, these businesses do come with a very tight margin. They are very, very competitive margin. So as a result of which, I think many of these companies probably, I think, would not be expanding the profit as much as I think they are basically getting the valuation today. So that part, I think, is slightly a mismatch as I see it currently in many cases. And maybe that calls for some price correction, or if not fully price correction, then the time correction into the valuation. That could possibly happen out here. The offset clause is basically, I think, more interesting because once you have the imports and probably you start sourcing domestically also from India for the export purpose as well. I think that is more interesting because that builds the entire ecosystem for the country, and that is what is more exciting. So maybe I think under the shadow of HL or BL, I think there are other companies which are smaller companies comparatively, and they could possibly have relatively better times going forward because they are part of the ecosystems. They could scale up, I think, as big, probably, I think, over a period of time. So one could possibly start identifying those kind of stories which are probably more looking attractive at this point of time.
Okay. All right. Thanks a lot for that, Deven. I think Parikshit will be joining in just a bit to fill us in with more on that. But for the time being, I think let's focus on IDFC First Bank. That's under pressure. CLSA, they have downgraded the stock. Abhishek's with us to fill us in with more details. Abhishek?
Well, Nigel, as you mentioned, CLSA has downgraded the rating on IDFC First Bank to underperform from buy. However, they have increased the target price to about rupees 85 per share from the earlier target price of rupees 80 per share. They say that IDFC First Bank has been one of the best performers on a year-to-date basis. So it has also outperformed Bank Nifty by about 35% in last 6 months. So while they like the bank's compelling loan growth story or the growth story, however, they think that the valuations on price to book value of 1.8 times 1 year forward is on the higher side and does not reflect the unfinished journey on the ROE improvement that the bank has undertaken. So they believe that the ROE of the bank can touch about 14% by FY26 when compared to about 11% core ROE that the bank recorded for the quarter of Q4 FY23. So which is why, they have downgraded the stock. Back to you.
Right, so the stock's down about 5.5% as we speak right now. Now, the HAL-GE deal, which my colleague Parikshit reported a fortnight back. Parikshit is with us with just a revisit of that story. I mean, Parikshit, the exciting bit about this is the technology transfer, which you'd highlighted will happen. Take us through the contours of what you'd reported and what, of course, is coming out now.
Well, we're also learning from sources in the Indian industry and the Indian government that the deal has now been signed. Why is this significant? Is because this had been in works for almost 5 months. And even before that, since 2012, an MOU had been agreed upon earlier, but we were not happy with the level of technology transfer. But now we believe, and this is coming from top sources, that we are likely to get 80% technology transfer by value over the next 3 years. This is going to happen in phases. Initially, we are likely to get the jet engine parts from GE in a CKD and SKD form. And by the end of a 3-year period, 80% of the value addition to the jet engine will happen in India. Now, as compared to some other deals that we have with other nations, that is royalty per product, in this case, most probably, we are going to pay a one-time fee to the United States and to GE as well. This could be a little short of $1 billion is what we're hearing from the government. A very important deal for HAL, for the Indian government. We're talking about jet engines which will power the Tejas Mark II aircraft and our indigenous fighters in the years to come. So this really opens up collaboration in the defense sector. And we were speaking to Bharat Forge yesterday, and they also wanted to be involved in this project in some way or the other. And we also are picking up from the Indian industry that 600 to 700 Indian MSMEs could benefit from the supply chain of jet engines manufactured by these two companies, possibly in Koraput and Odisha over the next few years.
Okay, Parikshit, thanks very much for that, and more on that story with Parikshit, over the course of the evening as we get more details, but this seems to be pretty significant. We'll try and have the management of HAL also join us, at the earliest, and ask them about what, of course, has been signed and what all it involves. Now, Ajay Vora is joining us now. He's head of equities at Novama Asset Management. Ajay, good to have you with us here. Thank you very much. HAL, of course, is what we were talking about, but it kind of also puts the focus on defense, right? In a big way. Stocks, of course, have rallied, but what do you make of it? Do you own anything in the portfolio? Do you like any of these names? If this is directionally, if this is where it's going to go, then there could be a lot more value creation. When I say directionally, I mean direction towards technology transfers, etc., across a range of industries. Here we're talking about aircraft, but there are all other kinds of sort of weapons which we import right now. But we're talking about making in India with the transfer of technology. What do you make of it, Ajay?
So good afternoon, Prashant, and thanks for having me. So honestly, it's definitely a great deal for the economy, for the government, and for the entire ecosystem. And this is exactly in line with what we have been discussing on what the government has been actually promising over last few years. And we all know, this takes a little bit more time, and eventually this has materialized. But I think it's great for the market perspective also because these kind of sectors offer very large opportunities, and that is now materializing. So in a way, if you look at sectors like defense or railways, these were non-existent a few years back, and we have amazing opportunities in these spaces now. So coming back to the how stocks have done, obviously a lot of positives are priced in to a large extent. So there can be some sort of time correction. But my sense is from here on, if someone is really having a long-term view on these sectors and these names, there can be a reasonably decent value creation happening over here.
Okay, so that's the call on defense. Ajay, hi, good afternoon. What else? I mean, this has been a red hot market, right? Specifically mid caps in the last 2.5 months. Where do you still see pockets of opportunity?
So, hi, Surbi. So, if you recollect, in our last conversation, this is what we had discussed, that we were getting more and more constructive on the mid and small cap side, considering their underperformance. And also, if you look at it, the whole setup was pretty much ripe for mid and small cap to outperform. So, falling interest rates, falling inflation, and earnings growth was also likely to be pretty strong. Basis that, we have seen almost 20% rally in BSE mid and small cap indices. Versus say 12% for Nifty. So that clearly tells you what sort of rally we have had over the last 3 months. And this pocket, I think, is coming out of significant underperformance over the last 2-3 years. And in spite of this rally, there can be some sort of retracement. But we are looking at more constructive stories and themes over here, which can deliver significantly higher returns over the next 2 to 3 years. So needless to say that this 20-30% move in stocks doesn't take away the long-term, compounding trajectory from most of the stories that we are tracking.
All right. Hi, Ajay. Just hold on to that thought. We have a bit of a 3 p.m. move that it's playing out. The markets have again taken a leg down since we have expiry that's playing out. 18,770, that's the low of the day. We're just around 7 to 8 points away from those levels. And we have seen that when we visit that level, it's bounced a little bit. But crucial that we hold on to that, otherwise we could slide quite a bit in the last 30 minutes or so. Well, Ajay, just doing a quick market check on that front since we have expiry that will play out. But Ajay, everyone's talking about what to buy. In this sort of a market, I think it's quite prudent to think what to sell as well. Which story has already played out. Because now, the stories, once they start playing out, everyone's giving you a stock tip. We're not at reached that euphoria stage, but which is the sector that you would be a little bit cautious on?
So you're right, Nigel. So, we've had almost non-stop, I would say, a 12% rally, almost 2,000-point rally. And we have oscillated well, from 16.5, 17 times PE to now almost 20 times at the index level. So we are looking at more like, 940 rupees EPS in FY24. So we are almost there at 20 times. So I would say that, we are closer to the fair valuation right now. And therefore, we need to reassess, the sectors which are looking pretty much expensive. So we feel that, somewhere if you look at the whole cap goods sector, it's running well ahead of its time. And, it's more of an order book driven business. So execution will definitely take place, but there is a limit to which the execution can be executed. So broadly, we feel that the valuations are very expensive in that space, and one can look at profit booking, in few of the very expensive names.
Okay, so Ajay, if I remember correctly, in our last conversation, you were actually a little cautious on banks. This is a few weeks back. And actually, the Bank Nifty has been underperforming. I mean, we've not seen any kind of a blowout move whatsoever, even though FII flows have been still decent. So what is the sense from here on? What is troubling the banks? Is it the expectation of a margin decline? And how would you approach it?
So the whole, the thought was that if you look at it now with inflation falling, it can have some impact on the growth rates as well, right? So credit growth, which had gone to almost 17-18%, can drop down to say around 12-13% going forward, with inflation also coming down. And most importantly, the ownership was also pretty high across most of the names. And the supply overhang, you must have seen pretty large blocks happening in Axis and Kotak, and now certain names in the financial side, the NBFC space. So there was a reasonably higher supply which was expected to come in. And considering, the valuations were not as cheap when the bank nifty was at much lower levels. So all put together, we thought that, considering the over ownership, reasonable valuation and the supply overhang, we thought that there can be a pause to the overall, bank nifty rally. And we feel that, still, if there is a couple of, few percentage points of retracement from here on, then it gets into a really, interesting opportunity. We would wait for that kind of correction from here on.
All right, Ajay, before we let you go, if I remember correctly, I think you were talking about pharma the last time as well. I mean, a couple of times ago, late April, if I remember right. What's the view out there? And if you could share a couple of stocks, I'm not sure, but I think you briefly mentioned Glenmark. You could correct me on that front. But what's your view on pharma? And do you believe that the best is yet to come?
So I think you recollect pretty well, Nigel. We spoke about pharma and especially Glenmark. So, when we evaluated almost 3 months back, we saw a lot of value in that space. And fortunately, that space played out pretty well for us. Coming back to, Glenmark, as I said, that, large part of the valuation, I would say reverting back to the mean has taken place. Now it will be more like, how they deleverage on their balance sheet, and also improvement in their profitability because of reduction in R&D spend. We need to evaluate at that point of time. But the idea is that, when we spoke about it, the stock was trading at less than 4 times EV to EBITDA. And therefore, we found a lot of value over there. But if you generally look at the whole space, the undervaluation of the entire sector is now getting corrected. And therefore, most of the names are trading at fair valuations. And in fact, in this rally, that has been the case with few other sectors as well. So if you look at NBFC as well, most of the names were trading, way below book value. And last few couple of weeks rally, we have seen that also reverting back to mean. So, the best part about this rally was that, it has been pretty secular across most of the sectors. And now we are looking at more like fair valuation rather than, below mean valuations.
Okay, got that, Ajay. Thank you very much for joining in. Good having this perspective from you, and we look forward to our next conversation. We do have to take a quick break with the news. The markets are managing to just hold above that low, that intraday low that Nigel's been talking about. So 87,770, for what it's worth, there's a fight going on, but there's a lot of momentum on the way down. So let's see. And we still have a good 20 minutes of trade left. We'll take that break, come back, and get you the trading calls for the last 20 minutes.
We understand that the company has finally received the US FDA approval for the generic version of the Spiriva drug, which is used to treat asthma.
The CNBC-TV18 news break has been confirmed. US FDA has indeed given a nod to the company for Spiriva.
We look at the addressable market, we think it's about somewhere in the zip code of $500 to $600 million.
It could certainly be a very meaningful addition to our overall portfolio in America.
The first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal.
What is the average run rate that we can now expect because of Spiriva generic?
We're at around 180 odd million at this point of time, right? And we'll launch it the next quarter. I think obviously it gets back to north of that 200 million.
welcome back. That battle continues, just holding on to that 18,770 odd. But the pressure on the downside is quite immense. Let's see whether or not this time around as well we can pull back. We've got around 19 minutes or so to go. So let's see how this one goes. But let's move on then. An important announcement is expected from the MSCI tonight that could have far-reaching impact on emerging markets, particularly India. What's the expected announcement and the impact cost? Well, Vivek joins us to tell us exactly that. Vivek.
Well, thank you. It's an extremely interesting event that's expected tonight, that could actually have a significant impact on India's weightage in the emerging market universe. So positive outcome from this particular event could actually see India benefit quite significantly in terms of foreign fund inflows as well. So what is the event and what's exactly keeping us excited? So today evening, the MSCI will actually announce the 2023 annual market classification review results, and the reason we are watching it quite closely is to see how MSCI decides to classify South Korea. There's a likelihood that South Korea may be put into the watch list for actually going ahead and a recategorization into a developed market from an earlier emerging market. However, we need to understand that the likelihood of such an event, and in case there is an upgrade for South Korea, how will India benefit from such an event? So to give some background, MSCI in fact published in its 2023 Global Market Accessibility Review on June 8th of 2023. However, over here, MSCI did not change any of its previous ratings on South Korea's 18 accessibility measures, which it actually applies to assess market accessibility. However, the review notes that it may only adjust the relevant ratings once, once the proposed measures are fully implemented and tested by international investors. Now, going forward, Nomura notes that it is still possible for actually South Korea to get into the watch list. In case South Korea is put onto MSCI's watch list, the tentative timeline for South Korea to enter into MSCI's developed market index will be over a span of 1.5 to 2 years. Nomura says that an eventual inclusion of South Korea may only be in late 2024. The reason we are tracking this particular event is because South Korea currently actually accounts for almost 12.4% of MSCI EM index, and a reallocation of emerging market money may actually see net inflows into other large EM Asian markets. This implementation will prove to be a net inflow event for other EMs like China, Taiwan, as well as India. Let's look at India's impact. Nomura actually estimates a significant impact in terms of inflows into India and sees close to $26 billion of inflows into India. It is to be noted that this includes both active as well as passive funds, and Nomura also estimates that it may take as long as 7 days of average daily trading values in India to actually absorb this kind of inflows. To break up the total estimated $26 billion inflow, Nomura estimates that active fund inflow may be around $20.1 billion and passive fund inflow may be around $6 billion. Remember, active fund managers are likely to position ahead of the actual inflows, while passive index EM fund flows will only occur much later at the time of actual inclusion.
एक पैसा आने दो हम absorb कर लेंगे.
Well, this is
7 days, 10 days.
But very, very interesting. But the only thing is that there is the if, whether, if Korea gets upgraded to a developed market. And then even if that happens, I think the only slightly heartbreaking fact was the timeline. You're saying end of 2024 is when it'll happen. And then, the reorientation with respect to India.
Don't be greedy now, Survey.
Okay,
this is like in office
we'll
when you expect your you expect your boss to have a promotion. So
I thought something was coming. I thought Prashant's going to be announcing something big on it.
The closest I can think of the analogy is like when you have a 1 day holiday in the week or a 2-day holiday, and then you come back the next week and you still want more. So greed is good, guys. Let's not forget that, right? Someone famously once said greed is good.
Should be you're getting a truncated week next week. Enjoy that. There's a holiday next week. So
next Wednesday, right?
Always on top of that. Yes. Okay. All right. Thanks a lot to Vivek for joining.
By the way, we are sounding very cheerful here, but the market is not, Nigel, right?
Yes, the market is still fighting around that mark. That 18,770. It broke by a few points, but the bulls, they're just trying to fight in there. We've got 15 minutes. That big slide has not come about because still the bulls are fighting in for that mark. You want to close above 18,770. And it appears as of now that range at least is getting defended. Mitesh is back with us. He's been talking about stocks index has not impressed him too much today. Mitesh, give us a few buy or sell calls.
So, Nigel, I have right now only sell calls given the fact that, it's looking like the market will head towards the lower end of the range. So, Nestle is something which I would recommend as a STBT. Recommend selling here with a stop of just about levels of 22,700 or maybe 10 points above that. A target of around 22,200 on the downside can be looked at. Similarly, I have a STBT on Navin Fluorine, which I would recommend selling with a stop at about 4,600 for targets of around 4,470.
All right. And thanks a lot for that, Mitesh. By the way, HCC, that's the stock in focus. At the start of the show, we highlighted there was a large trade that changed hands, close to 4.5 crore shares odd. And after that, there were a couple of other blocks as well. The stock has now moved to the high point of the day. Volumes are massive out there. At around 2:30, that's when the block deal took place. And from there, it'll be interesting to see who are the participants to this particular trade.
Nigel, volumes, by the way, on HCC are basically all-time highs.
Yeah.
I mean, we've never had volumes this high
25
ever.
crore.
On the NSE, I think that is about, we're seeing 23 crore shares on HCC, just on the NSE. Mitesh, I don't know if Mitesh with us. Mitesh, if you're there, sorry, the 20-day moving average for the Nifty comes in at about 18,650 or so. When you said we perhaps will go to the lower bound, I mean, is that what you meant around those levels in this leg?
So I've been talking about a range of 18,650 and 18,850 on the upside. 18,850, 860 on the upside, and broadly I think 18,650 is the lower end. So yes, that's what I mean.
That's the 20-day as well, and that's the big one. I mean, big one in the sense, I mean, big one within a kind of shorter time frame. That's always a 20-day is significant in that sense. We're about 100 points away from that level on the Nifty. Time for a quick commercial break here. We'll come back. Ambarish will be with us with his stock idea. And of course, I mean, some color on the markets from Ambarish as well. We're back.
Welcome back. Well, market just holding on to those lows of the day. Reliance Industries has taken a leg down, which puts some pressure because that's the big heavyweight in there. So that's moved a little bit low. And the Nifty Bank, for some part of the session, well, was trying to put in a bit of a fight. It was doing a relative outperformance, actually, but that as well is buckled under pressure, down close to around 130 points odd. Amrish Palika joins us to help us out with some fundamental analysis. Well, Amrish, actually, it's a good day that you're joining in because people want to know what to buy. What's on your watch list? What are you looking to buy? And if you give us some rationale.
In fact, my pick today is Federal Bank. Although if you talk about overall banking sector, I have not been very bullish at this point of time, but Federal Bank actually stands out. I mean, though it's a south-based bank, but then it has an extremely good branch network across India, including Northeast, and more than 1,355 branches, nearly 1,900 ATMs, with more than 50% of these in semi-urban areas. Q4 was decent, especially after a record Q3 where they declared the highest quarterly earnings. Q4 NII was up about 25% YoY and about 2% lower Q on Q. And NIMs have topped out after showing 3.5 in Q3. Now they are at 3.31, and the management expects it to remain the same range for FY24. Deposits again were higher by about 17% YoY. Credit growth was about 20% higher. Asset quality is very stable. Gross NPA is about 2.26 and net NPA is about 0.69. Loan book 54% is retail, 46% is corporate, and they've been able to leverage on that fintech partnerships extremely well. Look at the gold loan book that's been growing at about 15% and stands at about closer to about 20,000 crores. So the growth has been better than what the management guidance has been, and that actually gives me the confidence. And we have seen the stock consolidating in a band in the last few weeks. So I think it's a good level to buy this at the current levels with a target of about 180, which is about 1.5 times adjusted book value for FY25. And again, one of the reasons why I'm suggesting Federal out of the other banks is because I see the NIMs for all the other banks topping out in Q1. I think Q1 will be lower than Q4, whereas that's already happened for Federal Bank in the last quarter. And they've been talking of now stable NIMs going ahead. So that's one of the reasons why I'm suggesting Federal Bank out of the other banks.
Federal is Amrish's pick. Amrish, any thoughts on HCC? It used to be one of the poster childs of the last big bull market.
Yeah.
But I guess a lot of people stopped tracking it, etc. But today, it's seeing a very large move. There's been a big block. Volumes traded at the highest ever. Any thoughts?
No, in fact, we've been hearing about this for the last couple of weeks. And if you look at the order book and execution, I think both these are decent for HCC looking at the price and looking at the market cap of the company. I think the only issue was the balance sheet. And what I'm hearing on the street is that things should be set right there. But again, this is only heard on the street, so there's no confirmation.
Okay, well, HCC got, apart from the promoters who own about 18% of the company, you have institutions like HDFC Trustee, you have Canara Bank, and then there are large foreign holders as well. It's a Mauritius-based fund, so not quite sure about the identity, but 7.5% with this Mauritius fund. So, yeah, there is a fair amount of institutional ownership, and we'll only know the exact identity of the buyer and the seller by later this evening. Amrish, hi. So, Federal Bank is one such idea. Let's round it up with the controversy's favorite child, and that is Z. I mean, there's so much going on, right? Deal happening, not happening. I mean, one day the stock falls thinking it's off, and then it rallies saying, no, Sony is going to stay interested. I mean, for someone who's willing to play the Russian roulette, so to speak, this could be very interesting because the stock is at 180, deal happened at 320. What would you do with this?
See, there are two schools of thought. One school says that possibly this deal will not go through because of all the controversies which are there. The Sony Z merger may not go through. I am in the other school of thought where I believe that this deal will finally go through because whatever said and done, the promoter holding is quite low. And I suppose Sony would prefer that they have more professional management on board than the earlier promoters. So I think Sony should be in a much better position right now for this merger. And whatever controversies are there, they are the past. So I don't think they'll be carried forward post the merger. And I suppose all that will get settled before the merger, although the merger could take a bit longer. So, I mean, at this point of time, I mean, I would surely bet on Z from the point of view of the merger.
All right, Amrish, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. So that's basically Amrish with his perspective today, and Federal Bank is his stock for that he's tracking and he likes at this point. Now, let me just quickly wrap up things. So we will end at 18,772, which is down about 82 odd points, and I think you know, the big turn happened. Actually, there were two big turns. One was right in the morning after about 10:30 or so when the market sold off completely. There was a big collapse all the way till exactly 1 o'clock in the afternoon. From 1 o'clock till about 1:50, there was a big recovery, which was about 100 points. And then came the next leg of the selling, which basically took us to the day's low at about 3:15. And we have a little bit of a bounce that we've seen as far as the close is concerned. So pretty volatile day. I would say, though, that I think what's happened in the mid-cap part of the market perhaps is, you know, is something to note, because we've not had even a 1% fall in so long, right? I mean, on the mid-cap index, we had a 1.25% cut, and I think the small-cap index was down about 0.75% as well. You know, day before yesterday, I mean, actually, even when we started this week on Monday, we started with the point that RSIs, relative strength index, on both the mid-cap and small-cap indices, 14-day simple RSIs were almost 90, hitting 90. Anything above 70 is overbought. We got that 1 day of correction. I think that was Tuesday. Wednesday, the market came right back. But, you know, today, again, we have a bit of a pullback which is happening. So dithering at higher levels, but there is certainly some amount of trepidation which seems to be starting to creep in. Surabhi.
Well, Prashant, just to highlight some of these mid-caps that have cooled off, like you're pointing out, because today's hallmark really is the mid-cap cool-off, along with the fact that the Nifty's had a slightly rough session. Look at the names. You've got IDFC First Bank down about 5.5%. That's, of course, on some of the negative brokerage reports that came in. But even beyond, I mean, financials have been weak. Aditya Birla Capital down 5%. M&M Finance down 4%. India Cements, which came out of F&O ban, is down 6% today. Spark, Sun Pharma Advanced Research, trending lower. Quite a few names. Data Patterns, a stock that's done well this year, that also cooling off. So lots of profit taking on the mid-cap side of the market. Even some of the other banks, PNB, RBL, some of the other lenders like REC, PFC. Basically a weak day for banks and NBFCs.
That's right. But Surabhi, we've got the stock right. Well, you'll be very happy. Aether Industries is up another 5% today's trading session. For this week itself, it's up close to around 17%. So that had a good run in trade today. A couple of these sugar-related stocks as well did well. Dalmia Bharat Sugar, that one was up close to around 6%. We had the management of MM Forgings who joined us. They're currently talking about doing 2,000 crores for the coming year, but they're saying by 2030, you'll have revenues coming out of the EV vertical itself, which will be another 2,000 crores. So MM Forgings goes home with gains of close to around 6% or thereabouts. What was losing out from the F&O stocks? Well, you had a few of those names in there. Vodafone Idea was down close to around 4%. Rain Industries as well was under some pressure, but otherwise, more or less a day where we saw some bit of profit taking, but should be at the end of the day, 18,770 has got defended.
Well, let's see whether the bulls can put up a fight tomorrow, last trading day of the week. We'll see what kind of handover we get from Wall Street. Remember, the Fed chair is speaking again today. He speaks before the Senate Banking Committee. So let's see if we get some more hawkishness around interest rates, etc. It'll be an interesting one to watch out for. But for today, a bit of a breather in what has otherwise been a huge rally for the market. And I can't help but not say this, Prashant, 1 point away, right? Today we were 1 point away, and then we get this kind of turnaround.
Well, I think that's true. Absolutely, not quite there till you're there, right? I mean, 1 point, that's away from the all-time highs. Okay, that's the close, and it's also wrap on this edition of Closing Bell. From all of us here in the studios, and of course the PCR, it's goodbye. Thanks very much for staying with us. Stay tuned.